Okay, wow. If you've looked at your crypto portfolio at all in the last few hours, you know exactly what I'm talking about. That feeling in the pit of your stomach when you see all that red. In what felt like the blink of an eye, the entire market just took a swan dive off a cliff. So what on earth just happened? Let's break down this flash crash right now and figure out what's really driving the panic. And just to get a sense of the sheer scale of this thing, look at this number, $770 million. That's not the market cap drop, no. That's the amount of money that was liquidated. We're talking about leveraged positions, basically borrowed money that got completely wiped out. Poof, gone. This wasn't some gentle dip. It was a catastrophic cascade that vaporized a fortune. And you could just feel the collective gasp across the entire crypto world. Crypto analyst Aaron Bennett really summed it up, saying, "This is an insane day." I mean, when you see huge established coins getting cut in half, 50% in a single day, you know you're watching a major market event unfold in real time. So how in the world did we get here? This wasn't a slow bleed. This was a sudden, violent, out-of-nowhere collapse. And it seems like we can trace it all back to one single announcement that sent shockwaves not just through crypto, but through, well, pretty much every market on the planet. This chart really lays out the carnage. It was everywhere. This wasn't just one project having a bad day. Bitcoin, the king, down 16%. Ethereum, down 20%. And major altcoins, they got absolutely hammered, down 30% or even more. It was a total systemic bleed out. There was literally nowhere to hide. And that brings us to the main event, the thing everyone is pointing to as the cause, the Trump tariff trigger. Yeah, the catalyst for this whole mess seems to be a piece of geopolitical news that put the entire global financial system on high alert. And this timeline here, it's like watching dominoes fall in slow motion. First, on October 10th, China makes a move tightening its control over rare earth minerals. You know, the stuff you need for basically all modern tech. Then, President Trump fires back and fires back hard, threatening a staggering 100% tariff on everything from China. And just minutes after that social media post went live, boom, the markets went into a freefall. Here's the exact quote that lit the match. It's not subtle. The key phrase right there, over and above any tariff that they are currently paying, was a signal to every investor in the world that the trade war was about to go nuclear. And when faced with that level of uncertainty, what do investors do? They sell anything and everything that feels risky. Now, this is a super important point. This was not just a crypto problem. The S&P 500, the benchmark for the stock market, dropped almost 3%. And the VIX, which is basically Wall Street's fear gauge, exploded by over 30%. This was a classic risk-off event. It's a fancy term for a market-wide panic where everybody sells everything, stocks, crypto, you name it, and just runs for the safety of cold, hard cash. But while the tariff story is the one you'll see on the news, some crypto old-timers are looking at the data, scratching their heads and saying, something doesn't add up here. They're asking a pretty big question. Was there more to this than just a scary headline? Which leads us right here. Is the tariff news really the whole story? A lot of people aren't buying it. Some pretty sharp analysts are arguing that, yeah, the tariff threat was the perfect excuse, but the sheer speed and brutality of the crash, it points to something a little more sinister happening behind the curtain. So you've really got two competing narratives. On one hand, you have the tariff theory. It's clean, it's simple, and it's what most of the mainstream media is running with. But then you have the manipulation theory, which suggests this wasn't just a panic, it was a planned attack by exchanges to cash in on all those liquidations. Okay, so if you're making the case for manipulation, here's your evidence. First, the setup was perfect. There was a huge imbalance in the market. $20 billion betting the price would go up versus only $8 billion betting it would go down. That's a massive, juicy target if you want to push the price down and trigger a liquidation cascade. Then, surprise, surprise, major exchanges like Binance and Coinbase just happened to go down for maintenance right at the peak of the crash, trapping traders. And finally, people are pointing out that we've had scary tariff news before, and it never caused a crash this bad. The whole thing feels convenient. All right, deep breath. Despite all that chaos and fear, a lot of experts are looking at this situation with a completely different lens. They're focused on the long-term bull case, and they see this crash not as the end of the world, but as a painful and maybe even healthy reset for the entire market. So, what in the world is a healthy reset? I know, it sounds a little crazy, but think of it like a forest fire. In the moment, it's terrifying and destructive. But what it's really doing is clearing out all the dead wood and underbrush. In our case, all the crazy leverage and gambling. It's a painful process for sure, but it lets the market grow back from a much stronger, more solid foundation.
And this is so crucial to remember. The actual reasons to be optimistic about crypto in the long run, they haven't changed one bit. The Fed is still looking to cut interest rates. The AI boom is still happening. Giant institutions like Morgan Stanley are still pouring in. We're getting closer than ever to regulatory clarity, and the core idea of Bitcoin as a hedge against inflation is stronger than ever. The underlying story is still incredibly bullish.
You know, beyond all the charts and financial talk, there's this really powerful human element. As the Nobel Peace Prize winner Narges Mohammadi said, Bitcoin can be a vital means of resistance. It's a lifeline for people in countries with collapsing currencies or oppressive governments. And that fundamental use case, that value proposition, has absolutely nothing to do with day-to-day price swings. And that long-term conviction is why, even after this bloodbath, you see these kinds of price targets from some of the most respected analysts out there. We're talking Arthur Hayes, Plan B, Peter Brandt. These guys are still calling for Bitcoin to hit hundreds of thousands, maybe even $1 million this cycle. To them, a crash like this is just a bump in the road on the way to much, much higher prices. So all of this brings us to the core dilemma for anyone in crypto, right? It's the constant battle between short-term volatility and long-term vision. It's all about learning how to tune out the noise and focus on what actually matters. So what's the takeaway here? First, you have to accept that crazy volatility like this isn't a flaw in the crypto market. It's a feature. It comes with the territory. Second, you have to get really good at telling the difference between a scary headline that causes a temporary panic and something that actually changes the long-term story. And third, history shows us that these moments of pure, unfiltered panic have almost always been the absolute best buying opportunities, if you have the stomach for it. Look, if you remember just one thing from all of this, let it be this. While the price action was ugly, just absolutely brutal, the fundamental story, the real reasons for crypto's growth, they are all still completely intact. Nothing about the technology or its potential has changed. And that kind of leaves us with a final big question to chew on. In a market that can get completely rocked by a single social media post, just as easily as it can be propelled by a genuine breakthrough in technology, what truly defines its value in the end? The headline of the day or the fundamental code that powers it all?